Welcome back, everyone. It's been a storied start to the market week with geopolitics heating up, mega-cap FANG stock earnings on deck this Wednesday, and of course, a marketplace that is stretched from a valuation standpoint that sold down at the back end of last week and is now trying to retrace back up. At the hard right edge of the screen in this four-quadrant channel, the S&P E-minis are trying to get back up into the uppermost quadrant and up and away through earnings season, but we are dealing with a barrier of resistance, a set of nested volume profile histograms resolved to a set of VPOCs, or volume points of control, in that 75-55 area. That's a ceiling. It was a floor when we were above it last week. We broke down below it on Friday. We came back to test the underbelly of it so far in today's trade, but we have not successfully seen the market shoot back up through it and stabilize. We're probably in a market that's going to try to hold up ahead of the Mag 7 stock earnings, which would be Alphabet and Tesla on Wednesday. But of course, can it sustain? Well, the NASDAQ is in a worse position than the ES is overall. Let's go take a look at the NQ here on a similar type of chart. You can see that it's very close to the lows that were made on June the 9th, 10th, and 11th of this year. We, in fact, came down below those lows for the U contract relative to the U contract back at that point in time and made lower lows, opening the door for potentially more damage to the downside. However, on the day, we've been trying to get off the mat and get up and above the center of the weekly pivot range to make it up towards the volume point of controls that are nested in here from these volume profile histograms in and around the 29,850 to 650 area. Is the market on the NASDAQ side more oversold? Yes. Is the slingshot pulled back further? When released, is the price action more likely to move up faster? Likely, yes. But of course, earnings is a wild card. Watch out below 28,500. Below there, downside risks can grow. Above 29,100, the potential to backtest the underbelly of this structure is in play. And the question mark of whether or not this market will be able to hold up through earnings season, i.e., can the S&P E-minis make it back up towards the all-time highs? We do have to get through, of course, the 75-55 area, which is problematic at this stage so far on the day. Could Wednesday's earnings do it? Well, if the NASDAQ finds itself pulsing up above 29,100 and making a run for this border right around here, the 29,850 to 650 area, that would definitely encourage the ES higher. Sustainability depends on whether the NASDAQ can hold above this key level. Now, I've been using trading tactics on the day on both the long and the short side overall, done fairly well on the day. I'm going to take you over there right now. We are in a sell signal state on a daily chart. We're in a sell signal state on a 4-hour chart, 1-hour chart, and recently now on a 5-minute and 1-minute chart. I've been trading a variety of accounts throughout the day today, individual accounts one at a time, and up just a little over that 1,300 marker gross so far on the day. Looking forward to building on that in the balance of the day and the days to come overall. Using trading tactics with clear tools that have high probabilities associated with them is what we do over in the active trader room and on WealthCharts alike. For those of you that have watched the summit presentations from last week, you'd have heard me talk through multi-time frame and how I make decisions. Well, I do that each day live on WealthCharts, so feel free to join me there. And of course, in the active trader room, I hope that you have an incredible rest of your day today. Thank you for watching this video, and I hope that the insights contained within are helpful in your decision making. Have a great rest of your day. We'll see you on the flip side.